Well, good morning. I'm Pete Najarian. This is The Take for Market Rebellion. Got here a little bit late today. The Take's coming out a little bit later today, and probably a good thing because we have an opportunity to see this market start to open up for us. But before we do that, let's just take a look back at yesterday. We've talked about choppy markets. We've been in choppy markets. We've talked about the volatility index trading somewhere between 31 and 35. As a matter of fact, yesterday it went out 31, so things were a little bit calmer. There was a market that was hit early, but then started to come back a little bit. The surge in viruses, that's certainly something that's been in focus, and it seemed to start off the day in focus. And some of the clusters that we were seeing in Germany and Tokyo, and obviously some of the multiple southern states as well. But we started to turn back around. All of a sudden, you look over at the XLK, you see Microsoft, Apple, Amazon, Facebook, a lot of the usual suspects actually starting to pull the markets back up again. The Dow finished up about 0.5%, NASDAQ up about 0.75%. So you've got that volatility still holding in there. You know what has dropped again is the volume yesterday. The last 2 days, we've seen a drop in volume. That's probably going to change today based upon what's going on today with this heavy selling. We'll get into that in a second as well. But the volumes, like I say, closer to 26 million, 6.5 million off of what the June average has been. So that is very, very significant, especially when you look at that on a percentage basis. That's a huge number. So we're seeing that. Now, what concerned me about yesterday, not overly, but it did concern me because there's so much negativity surrounded by the financials. But yesterday, the financials started the day right out of the gate. They looked pretty good. They had a nice little pop there, and then suddenly we started to see them sift back down and not trade nearly as well as the market as it sort of was moving around yesterday. So that was something that really just stood out for me yesterday. It was a pause for concern, not overly, but just when are the financials going to finally start to really participate consistently? They have participated, but they've been holding around. You look at the XLF, take a look at where the financials have been for the last month or so. Around 23 to 24 on the XLF, fairly tight range, a nice little middle peak, and then pull right back again. But yeah, so that's something that's a little bit disturbing. So this morning, in the pre-market, we're down about 1%. Nobody in a big panic, down a couple hundred points, 250, something like that. And then suddenly you start to see the market and the floodgates start to open up and a lot of pressure. Again, it looks like the pressure coming from more and more waiting and concerns looking at what's going on with the virus and some of the outbreaks that people are seeing. So that turns people into sellers. There was a couple of buyers here and there trying to step in, got run over, some technicals maybe breaking down just a little bit. But we were down just about 800 points not too terribly long ago. I'm looking right now, we're down about 7.25. So we're getting pushed to the downside pretty good. You're talking about a 3% move. That should tell us that, as we talk about all the time, when you do the math of all this thing, you'd expect the volatility index actually to be even higher than it is right now. That's probably because we're just looking at a single day. But right now I'm looking at the volatility index that was in about a 31 to a 35 range, trading closer to 36. So there is volatility into this. And as a matter of fact, I'm actually surprised it's not a little bit higher, maybe something closer to 40, but we're not seeing that just yet. Maybe we will if this pressure continues to the downside. Now, the last I looked, every single stock in the Dow was down. Now, that's not totally unusual, but it is odd because normally you'll see something sort of perking up and showing a little bit of green, whether that might be a Coca-Cola on a certain day or United Health on a certain day, whatever it might be. We are not seeing that. The last I looked, every single name was in the red. So that stood out a little bit too. Now, when you look at the major indices and you're down anywhere from 2.5% to 3%, we've got a pretty significant move to the downside today. So what else is really moving? Well, energy. Now, we had recaptured that $40 level in the price of WTI and actually got up above 41. But today, down about 7%. That's certainly going to be impacting a lot of these energy names that have sort of moved along the way on the upside. So you look at Exxon, you look at Chevron, those are definitely down anywhere between call it 2.5% and maybe 3.5%, something like that. But how about the beta names in energy? Now, those are down significantly. And those are the names like Halliburton and ONEOK and Baker Hughes and those kinds of names that we talk about. Sometimes we'll just reference the ETF of the OIH, and it certainly shows you what we talk about all the time when you look at the XLE versus the OIH in terms of the beta of a 1 or a beta of a 2 or a 3 or a 4 or something like that. A lot of these names are definitely moving significantly faster to the downside today in energy based upon the fact that oil is off about 7% today. So The real pressure coming with the typical names that one would suspect, and that's why it is right now that you'd be saying, well, this is concerns about the virus. You're seeing airlines. I'm seeing cruise ships getting hit to the downside, casinos getting hit to the downside. Wynn stands out. Hotels, Marriott getting hit to the downside. So there is plenty of contributors to this big, powerful move to the downside that we're seeing right now. I just took a flash. We're down about 700 right now. VIX still trading up about 12% and trading right around 35.5, probably 36, somewhere in that range, depending on the moment that you look. But all of that being said, it's a really interesting trading day. A lot of option paper actually we're already seeing, and the one that I want to highlight for you today stands out the very most. That's the GLD. Now, I've talked about gold for a while now. Gold did break down a little bit here and there underneath 1,700, but we've also seen it basically hold on to that level and then start to move to the upside. We talked about it at 17 and a quarter, 1750, 1775, and today getting very, very close into those levels, about 1,800. So it's pulling back a little bit right now relative to where it was earlier, but certainly some pressure to the upside actually is the movement of gold. Now, why that's interesting is today we've had quite a few different days recently. As a matter of fact, I have a position in GLD. We've had quite a few days recently where we've seen a GLD. We've seen some of the miners. We've seen GDX. We've seen something in gold. We've seen it in silver. We've seen it in many of the different metals. But today, we got 3 separate buyers of options of all different types. And here's what I mean by that. The unusual option activity that we're seeing today, the closest one is the July 10th. The 10th expiring of July. We're also seeing November's. We're also seeing August. So it shows you just how much diversity there is in some of the approach to going on with what's going on in gold right now. So the GLD, you've got the far out buyers in November. You got the little bit closer, but still relatively far out when you talk about August. Or you've got couple weeks out with these July 10th expiring, and these are the 167 calls, trading about $2.20, sort of in that range. Stock was trading at the time, it's a little bit lower now, about a 166 and a quarter, somewhere in there. So about 3,900 of those bought. So that really did stick out. When you hit 3 hits from the same segment, same name, that really does stand out. It stands out for me today. That's going to be interesting because we've been watching gold as it's been sort of stair-stepping, pulling back a little bit, and then moving to the upside. And at 1,800, can it capture 1,800? We were just talking about, will it get supported down towards 1,700? Well, pretty nice move for gold. We'll see if these GLD buyers are going to be right in the shorter term, or if they're going to be really right, but it's going to take a little while longer pretty soon. But like I say, I'm already in GLD. I didn't trade any of these today because I already purchased it from the other day. Just to give you some full disclosure. Understand the options world, folks. That's where the activity is. That's where the growth is. Even on a slower day like I talked about yesterday and the day before at 26 million, those are huge numbers. Absolutely huge numbers, especially if you look back in time and you see that the most active year ever traded about 20 million contracts, and here we are talking about how slow it is with 26 million. Gives you a little bit more perspective, but we're seeing all kinds of option activity today, incredible amounts of call buying and selling and puts being very active. As volatility is moving around, you're starting to see more and more in the options industry and in the derivatives markets trying to either hedge or put off some risk or participate in a different way, all kinds of different ways and methods that you can approach the markets each and every day. Folks, get educated. Market Rebellion is a place for you. Best educators in the business. Have a great day of trading.